Welcome to today's video. We are diving into the recent turbulence in Google's stock performance and why experts believe it may be an overreaction. Despite being down 9% year-to-date, there are strong signs that Alphabet, Google's parent company, is poised for a rebound. A recent report from Jefferies analysts suggests that fears around Google's competitiveness in the AI race are exaggerated. They argue that the current stock valuation presents a rare opportunity for long-term investors. Alphabet currently holds a buy rating from Jefferies with a price target of $210 per share. This represents a potential upside of more than 20% from today's price. Let's explore the core reasons behind this optimism. First, let's look at Google Search. Despite the rise of AI chatbots like ChatGPT and Perplexity, Google still dominates the search market with a 90% share. That's an impressive moat, and it shows resilience in the face of change. Moreover, Google's new AI Overviews feature is being used by 1.5 billion monthly users. That's a sign that users are not just sticking with Google, but are embracing its AI enhancements. Next up, YouTube. While often overlooked in valuations, YouTube actually generates 30% more revenue than Netflix. Yet, Netflix trades at a higher valuation multiple. That means investors might be undervaluing YouTube's true potential. Jefferies calls YouTube a key catalyst in today's video-first world. As user behavior shifts more toward video content, YouTube is well positioned to benefit in both ad revenue and premium services. Now, let's talk about Gemini, Google's large language model. While it hasn't gained the same spotlight as ChatGPT, it is quietly making waves. Gemini processes over 480 trillion tokens every month, a 50x jump from last year. That kind of data scale and growth in usage give Gemini an edge. Google is integrating Gemini across all its platforms, creating smarter results and improved user experiences. In cloud computing, Google Cloud Platform still trails AWS and Azure. But don't count it out yet. Jefferies sees major potential for growth, especially in AI infrastructure and government contracts. Google's strength in machine learning tools is giving it a solid foundation in the cloud wars. As AI services become mainstream, Google Cloud might surprise investors with its performance. Another bright spot is profitability. Despite heavy investments in AI, Alphabet's operating margin reached a record 40% in the first quarter of 2025. This trend is likely to continue. Cost-saving measures such as layoffs and AI-driven efficiency improvements are beginning to pay off. That gives Google more room to innovate without compromising margins. Alphabet's EBITDA margin improved by 300 basis points in 2024. And with $84 billion in net cash, the company has plenty of fuel to keep buying back shares and funding breakthrough ideas. Then there's valuation. Alphabet trades at just 11 times its forward EBITDA, compared to a 10-year average of 12.4. That makes it a discount opportunity when you consider its financial health and growth levers. The current underperformance may not be tied to Google itself, but rather market rotation and investor fatigue with AI stocks. In short, sentiment might be driving the dip, not fundamentals. Jefferies believes that with continued growth in AI, cloud, and video, Alphabet remains one of the best AI consumer plays. The company has multiple levers to pull for long-term success. One wildcard is Waymo, Alphabet's self-driving unit. It's still in the early stages, but it could become a billion-dollar business in the next decade if autonomous tech becomes mainstream. Alphabet will report its next earnings in late July. That moment could help reset the market narrative and confirm whether this optimism is justified. For long-term investors, it's all about perspective. The fundamentals are strong, the vision is intact, and the growth story continues. Sometimes, the best investments are the ones the crowd is ignoring. So, while 2025 has been rocky, the road ahead might be smoother. If the market is indeed overreacting, this may be a golden window to invest. What do you think? Is Google stock a buy right now, or should we wait and watch? Leave your thoughts in the comments. And if you find content like this valuable, consider supporting our channel. Every contribution helps us keep creating independent, ad-free analysis. Thank you for watching. Make sure to like, subscribe, and share this video with others who want deeper insights into tech and investing. See you next time.